After rattling global energy markets through escalating military actions and a widening conflict with Iran, the United States is now presenting itself as the problem solver by issuing a temporary license allowing countries to purchase Russian oil currently stranded at sea. The 30-day waiver allows the sale and delivery of Russian crude and petroleum products that were loaded onto tankers before March 12th. The license was issued by the U.S. Treasury as a temporary exemption from sanctions on Russian energy. It allows countries and refiners to buy oil cargoes that are already in transit and stranded at sea. However, the waiver does not authorize any new Russian oil shipments. The measure will remain in effect for 30 days until April 11th. The decision comes as global energy supply chains face serious disruption. The ongoing conflict in West Asia has threatened crucial shipping routes and triggered fears of oil supply crunch, pushing the prices higher. With energy markets on the edge, Washington says the waiver is a short-term step to keep oil flowing into global markets. The duplicity of the United States comes into focus as it claims the license will not provide significant financial support to Moscow, insinuating the move will not power Russia's war machine, even as Washington continues to pursue military operations in another country. The U.S. Treasury Secretary Scott Bessent said on X, to increase the global reach of existing supply, U.S. Treasury is providing a temporary authorization to permit countries to purchase Russian oil currently stranded at sea. This narrowly tailored short-term measure applies only to oil already in transit and will not provide significant financial benefit to the Russian government, which derives the majority of its energy revenue from taxes assessed at the point of extraction. Now, following the announcement, Russia's economic envoy Kirill Dmitriev said on Friday that the global market cannot remain stable without his country's oil. The United States is effectively acknowledging the obvious. Without Russian oil, the global energy market cannot remain stable, Dmitriev posted on Telegram. The move has already had an impact on markets. Global oil prices eased after the announcement as traders bet the temporary supply boost could relieve short-term pressure on energy markets. On March 5th, the U.S. announced a waiver allowing India to purchase Russian oil, originally set to expire on April 3rd, with the fresh deadline of April 11th for all nations. India gains an additional week to stockpile crude and ensure energy security. Since last week's announcement, companies like Indian Oil Corporation and Reliance Industries have snapped up unsold Russian crude, with India reportedly purchasing around 30 million barrels of Russian crude, some at premiums above London's Brent benchmark. The measure is a crucial stopgap as India imports nearly 90% of its oil, with about half transiting the Strait of Hormuz, now effectively closed. For now, the license offers a short window for stranded Russian oil to find buyers, but with geopolitical tensions still high and energy routes under threat, global markets remain on the edge over what comes next for oil supply.